In today's video, I'm going to be showing you how you can actually start finding profitable trades using a line chart and what I call the W and the M patterns to find a false breakout. So if that is going to help you to start finding profitable winning trades, then you need to watch the rest of this video so you can understand how you can start applying these techniques using the W and the M patterns in your trading today. As I said in the intro of this video, we're going to cover how you can use that line chart, and what I'm looking for is we're looking for a false break on the line chart. Now what do I mean by false break? Well, we see this pattern I've drawn here. Does it not look like a W? It very well does. You're going to see a double test like this on a chart. What we're looking for is the market to come back to test it, but in fact to break through and then rally back up, giving us that false break to downside. And again, if we're looking for the opposite market where we're creating what I call the M pattern, see how that's a W and this is your M. When the market comes back again, we want to see that false break and then drop away. So we have the W pattern and the M pattern using the false break. So that's exactly what I'm going to cover now in this video. And let's go through to an actual line chart. Now I'm on the monthly time frame. Now I want to go through all the time frames, demonstrating to you that this can be used on any time frame. You don't have to apply this on a lower time frame. It can be applied to a higher time frame and allowing you to see the direction of a higher time frame to then look for lower time frame entry. See how the market drop down and we start to see the ranging market. What does it create as it makes that range to the downside? We created these two highs. And if you look what happens when the market comes back into this area, we have the false break above this high and the market drops away. So this is a monthly chart. You can see this working on a monthly time frame. It's very simple. You're just using those highs and lows on the monthly. So if we was to look at this as a pattern, what does it create? It creates this M looking pattern. When the market comes back to those highs, you're looking for that false break and then the drop away. And that's exactly how you'll be able to trade the M and the W pattern with the false break. So that's a monthly time frame. Let's pop down to a weekly. Can we see the same sort of thing on a weekly? Well, looking right here, we have a large looking W. We have the market coming down, we bounce up, we pull back again, we bounce up again, and then we false break to downside and we've rallied higher. See how the market will find those areas on that line chart and we see the false break. Now once you've started to do this back testing on a line chart, you'll be able to go into price, and let's just quickly go into price and you'll be able to see exactly how the price will look on the chart. See how we have the bounce. Price respects that level and then we have a 2 candle reversal. And it's right there where you will look for an entry. How will you look for an entry? Well, once we send the false break back above, you can then draw out an area of demand. And you can see the market comes back, rallies up, comes back once again and rallies away. So inside that area, right inside here, is where you'll be able to find not an entry off this area of demand on a weekly, but you'll be able to find an entry on a lower time frame, knowing that you're going with the momentum with the higher time frames after seeing this false break. So hopefully that's beginning to be clear enough for you to understand why a line chart is going to be very useful in your trading, using, like I said, those M and W patterns. Let's go down to daily. We're just looking at current price. Okay, what do we see on a daily? Let's zoom out. Can we see this type of pattern on a daily? Well, it's not always going to be precise, but you can see we have this area here. What did that create? That created, as the market came up, we created this W pattern, false break to downside, rallied higher. Now that's within that area we just saw on the weekly. Remember, if I shrink the chart even further down, we can't quite go back in time, but you can see that this is them lows, the false break, and we rallied up. That is what we're looking at. But now we're on the daily. we bring price back onto the chart, and you'll be able to see this trend line was used instead. We created that W pattern. Remember, it's the easiest thing to look for is the W or the M pattern. We break lower, removing these lows off that trend line. We create the reversal, the market goes up. What do we then do? Now this is even better because now we have an area. Well, if you see the first breakout, this became your area of demand. We pull back, we break out, we come back, we retest it and create another area of demand. Again, so you have one test here after price went higher than this high, then after price rallied away, removing this high, it then came back into this area of demand and up prices went. So understanding not just how to use supply and demand, but the use of this line chart is going to help you to find those trades. Again, let's go back to a line chart. Let's now drop to a 4-hour time frame. Let's see if we can find some setups just using a 4-hour. So looking at the chart, they're not always going to work, but we can see here, we can see a test. We can see the market came down, we tested it, we rallied up, we tested it, and we had a small pullback before we dropped through to downside, and then we rallied up. So again, what does that create is that W pattern. And if we come closer into price, mark off that area. Let's go back. What do we see? As the market rallies up, so again, let's mark off those lows. These are those lows. We've dropped through. We've rallied higher. We've created this area of demand. And if we move this line, you'll be able to see where the market, again, we came back into it, we rallied higher, made a new high in the market, and then we pulled back once again, and then we rallied out. So that's how you can look for those false breaks. Now this is going to work on any time frame. Let's go to a 1-hour time frame. Let's go to current price. Let's have a look at current price. So let me just go back to the line chart. It's easy to look at the line chart. We have this area here. Now it's not always going to be very obvious, but again, we have the market, we break up, pull back, we go up, again, we pull back, we break out, and then we go to the upside. It's another false break. Now again, it is looking at it, it's not the greatest looking pattern this time. Now we don't have those long legs showing you that W pattern, but it is still the same pattern. This time we just use that trend line for the false break. And again, the false break, let's go closer into price. So what do we see on price? When we see this market rallied away, this would have been an area of demand. Now on this occasion, we don't get any pullback and the market just went without the pullback. So you're not always going to get it. But again, let's now look at the 4-hour and look at this section on the chart. What do we have here? We have another double bottom. So what does that create? That created this small pattern. There's a W pattern, so leaning to downside, a big breakout candle to downside, and we rally back out. Now on this occasion, price did go away, leaving this area of demand, and price has just now come back, tested it, went slightly into the demand zone, and then rallied back out. In fact, is a great trade that I took on a lower time frame, understanding this concept of using the false break. And again, using a line chart is not something you have to do, but the line chart is going to help you to see those patterns. Let's go to a 5-minute chart. Let's have a look at a 5-minute time frame. Can you look at this chart and can you see any of these false breaks? Now let's go in closer. Can we see any patterns? Again, we have this area, a double bottom. You can see the pattern this time. We have the false break, price rallied away. Did we have an entry on this occasion? Let's go to price. So here's price. Again, this was that area what was broken. The market rallied up. This is most probably that zone. Even here, there's the last bearish candle. We broke up with this bullish candle. The next candle dropped back down into the zone and we rallied away. So it's as simple as that, just applying the line chart. Now preferably you will be better off using at least the 1 hour time frame and above, because this will be more accurate. You then look for those areas on the chart. Now they can either be that M pattern, like we can see here, okay, an M looking pattern, or you're looking for that W pattern. Now it can either be with a trend line, false break, or you can be this double bottom. So you're either looking for a leaning W or a leaning M, and then you're looking for the false break and then the market to go to downside. So let's look at current price. What are we currently seeing? We are seeing this leaning W. We're looking for price to show us that false break. We have broken the actual trend line, and now you're looking for is the drop away. So let's put price on the chart and we can mark this off. This is that trend line. So price has come back. This is the leaning M. I'm not saying this is going to be a sell trade, but I'm just showing you the actual pattern itself. We've made the false break. If the market now drops through to downside, creating an area of supply, we get the pullback. That is where you'll be looking for a sell. Now, of course, you need to make sure you're going in line with those higher time frames. So if we went to a weekly and we had a look on a weekly time frame, what are we seeing? Well, potentially on the weekly, we do have this double high. And what does that look like? If we go to this area, we have a potential looking M pattern. We know we've already made a false break here to the upside. So could this be a false break to the upside? And then we see the market drop back down. We just don't know until we see what price does on the chart. So we'll be waiting to see now if this is a false break or whether price continues higher. Now, how will we know that? Well, again, if we go up to monthly time frame, what do we see on a monthly? Again, we have a lows in the monthly and we have these highs. So could it potentially be a false break now on the monthly and we see the reversal back down? Let's put price on the chart. Okay, so we can now mark off these areas. We know that's our pattern. This candle may well now break out and then we may see the drop down. It's not really a false break on the monthly yet, so that weekly we're looking at may well be a more of a push higher, and then we see the false break. So in the meantime, we'll be looking at those lower time frames to go with the move. So we need to potentially see the solid break to the upside and the continuation. So if we do see a reversal, then we know it could be a false break. So once you've gone through the entire time frames and know where we are, then you go down to the lower time frame, start looking for an entry. So let's say we are looking for a false break here. We see the market drop down, removing lows in the market. Then we're going to look on the lower time frame, like the daily, looking for that pattern on the daily. So like I just went through on that buy, we'll be looking now to see if the daily create that pattern. So let's say this has created the false break. We drop down like so. We then pull back up. What pattern we're looking for to sell? We're looking for the M pattern. So then we come back and we create this. We create a double top. Then we see the breakup and then the reversal, creating an area of supply, looking for the drop. Now I know that looks quite messy, so let me just draw this out. So we were looking for a pattern like this, for the break to the upside, then the drop away, creating an area of supply, looking for the market to come back into to sell. That is the pattern that you're looking for using that line chart. Now you don't have to use line chart like I said, but it's just to give you the added aid to look at the chart. The other one you're looking for is this pattern, the false break to downside, we rally away, creating this area of demand, looking for the market to come back for the buy. Now you will look for this pattern, the sell, the buy pattern, obviously once we confirm the direction on the higher time frame. So if we know you're bullish on a trend to the upside on a day like this, what would you look for inside here for a valid trade? You would go inside that area and you would look for the market as it's going up. You would look for the market to make these patterns for an entry to buy with the daily. This is where you'll be looking for that buy. Now, either looking for a price action signal or you're looking for the market to come back for a set and forget strategy. Now, if you've not looked at a set and forget strategy using supply and demand, I will leave a link above now to go through to that video so you can understand exactly what that is. If you want to learn the basics of supply and demand, I will also have the link in the description below in this video for you to go through for that free course. You can take that today. Now, hopefully you've enjoyed this video. It is in fact an old video that I recorded at the end of last year. Now, if you have enjoyed this content today, don't forget to give me that thumbs up. It's going to help me to know you're enjoying this content. And what I want you to do next is to go through and watch this next video on how I became profitable as fast as I could with those trade reviews. It's going to help you to see exactly how I trade those markets with going through each of those trades as I take them from start to finish. And I will catch you in that next video.